Hey everyone, it's Nate. Today I'm going to show you how to live for completely free. Sounds crazy, it is legitimate. I will show you exactly how, step by step. Let's get it. Welcome back everyone. My name is Nate and I'm here to help you master your money. All right guys, so today I'm going to teach you what house hacking is, how it can benefit you, and how you can not only live for free, but potentially get paid just for owning a home. It's really simple, straightforward. I will walk you through it step by step by step. It's gonna be great. Stick around to the end. So house hacking is a pretty straightforward process. Simply, you buy a little house here, and let's say you have 3 spare bedrooms, and you rent 2 of those out, and you live in the 3rd. That is house hacking. This can also be done if you buy a multi-family property, which means if you buy a duplex, triplex, or fourplex, what that simply means is it's one building, but there's 2 separate living sections in it that are coded and legitimate. For example, if you buy a $200,000 home and you put 20% down and your loan is at 3.1% interest, you will have a mortgage of $1,091 a month. And if the house that you bought has 3 bedrooms, and many of them are, then you can live in 1 bedroom and rent out the other 2. So in my area right now, a fair price to charge for a room and some shared spaces would be $600 a month per rented room. So in this instance, we would have a total of $1,200 per month in rental income. So if we take our $1,200 of rental income and our mortgage, that is $1,061 a month, we have a net cash flow of $139 a month. So we're already doing great. We are living for free. We are making a passive income just from using the spare space in our home as a little rental side thing. And we have some more cool things coming which are going to significantly help us out. So we're already doing pretty good. We are living for free. We are getting paid to own a home. Mind-blowing, right? There are so many tax advantages with owning a home. There's so many other financial advantages as well. It's massive. It is huge. So as early and as soon as you can, buy a house. It's just, if you as early as you can do it, it is huge. And so one more neat thing to consider here is that when you're looking to finance your home, if you're intending to rent out spare space that you have as income, you can actually get approved for a higher mortgage amount if you include that income with your income. So whereas you may have gotten approved for a $200,000 loan, with your extra rental income factored in, they may let you get a $300,000 loan. So you see there's a lot of things in here working in your favor to enable you to be able to buy a house, to get a good rate on a loan, and to get approved for more financing if you need it. So the value that you get from renting out your home does not stop with cash flow. That's just the first step. So the next step is going to be appreciation. In my area, appreciation is actually about 6.5% a year, which is really, really high. I'm in a very quickly growing area, and the houses around me are popping up quickly and going off the market just as quickly. And the prices just keep going higher and higher every single month. It's like clockwork. It's crazy. And so if we have a $200,000 home with a 6.5% appreciation rate, in the first year, you're going to gain about $13,000 in value just from appreciation alone. And averaged out over 12 months, this is going to be a gain every month of $1,083 in appreciation. So in addition to this, okay, get this. In addition to this, you can also write off every single expense that you incur that is directly related to the rental business. So if you got to buy a computer to keep track of your rental people, even though it's just 2 people, I mean, I wouldn't need that, but someone might. If you got to go buy a computer to keep track of your rental stuff, that's a tax write-off. You can write that off against your income so that you're paying less taxes at the end of the year. It's huge. It is incredible. Another thing to consider with this is that if you run another business out of your home, like say, yes, you may have those 2 bedrooms rented out, and that's your rental business, but you work in your kitchen, and you don't use your kitchen for cooking, but you sit in your kitchen table and you record YouTube videos. You can actually write off a portion of your mortgage interest and taxes that you pay on the property, as well as the other benefits you have going on. So let's assume that $200,000 house you bought was 1,500 square feet, and the space you have rented out comes to a total of 500 square feet. This means if you take the amount of business use space you have divided by the total space you have, you can come to a ratio as to how much of your expenses and taxes and interest you pay that you can write off against your rental income. So while the rental income is taxable, the appreciation is not. So let me explain that to you real quick. So with the house we're talking about, you would have a property tax bill of $3,720 a year, and you would pay $4,920 a year in interest. So if you take the annual total for property taxes and interest, you can go ahead and multiply that by 1/3, take that number, and then divide it by 12. This will give you your monthly amount that you're able to write off for business use, taxes, and interest against your rental income. So what this comes out to is $103 a month you're able to write off in property taxes, and $137 a month you're able to write off in interest. So there's one more thing I need to address, and that is how taxes work with appreciation. So as appreciation happens, you don't actually see a dollar amount come into your bank for that. That doesn't happen. But what does happen is your house gains value. But you don't have to pay taxes on that unless a couple of things happen. You only pay taxes if you sell the house, and a few things. You have not lived in the house at least 2 years. Your profit is more than $250,000 if you're filing single, or $500,000 if you're filing jointly. And so what this means is if you say you gain $100,000 in value on your house and you've lived there for, let's say, 4 years, and you go ahead and sell it, you will not have to pay any capital gains taxes on the money that you gain from the sale of your home. That is huge, that is massive, that is one of the wonderful things about real estate. You're able to leverage so many different tax rules in your favor. So if you know how the system works, you know the rules, you can know exactly what's going to happen to your money, to your investment when you make your next move. It is absolutely imperative that when you get into this kind of thing, you understand all the implications of every action you take so that you're the most savvy and wisest person handling your resources. That's really the key here. So let's go ahead and total all these numbers up. If you take your $1,200 of rental income and you subtract the mortgage interest, and the property taxes, you would end up with a net loss of $101 a month and $1,212 a year. So I know that sounds not good, but there's one thing you need to consider with all that, and that is taxes. So assuming that you make $50,000 a year and you have a loss on your rental business, this would save you $238 in taxes. That's money directly back in your pocket. The main thing here, the most important thing, the most valuable thing is the appreciation. This is untaxed money and value that you get. This is wealth building at its simplest, most primal form. And so in combination, for just the first year, you would get back a total value from buying this home, renting the 2 bedrooms, and using the tax rules that I just mentioned here. You would have generated $13,238 of wealth passively, fairly passively. That is a massive return on the money that you put in, and it absolutely 100% is doable. Buying a house is a challenging thing. Getting into that, knowing what to do, it's a lot. So I've made a video about this previously, and I'm going to link it above here in case you want to check that out. Use it as a resource, use it as a guide. If you're thinking about getting a house, but you know what, your credit's pretty sucky, well, I have a video for that too. So check those 2 videos out. That will help you on your way to start trying your hand at purchasing a home and then maybe building a little rental property empire. You never know. So with that said, guys, I hope you enjoyed today. I was able to provide value for you and what you do and all the wonderful ways that you learn and try to figure out how to make a couple extra dollars. I commend you on that. Hope you have a great weekend, and I will see you next time. Bye-bye.